Good morning, I'm Joe Brusuela, Senior Economist at Bloomberg LP with your Bloomberg Economic Brief Morning. Cup of Joe. The condition of the consumer, fresh info on the U.S. housing market, and earnings from Citigroup all figure to shape investor sentiment on Monday on what's going to be the start of a very interesting week for the U.S. and global economies. This morning, we're going to see quite a bit of data. At 8:30, we're going to see that retail sales, as well as the April Empire Manufacturing Survey. At 9 a.m., we're going to see the TICS data, and at 10 a.m., we're going to see business inventories and the NAHB Housing Market Index. I want to turn briefly and talk about retail sales and the Empire Fed data. Retail sales are going to sequentially slow this month following the robust 1.1% increase for the month of February. Now, while the pace of auto sales slowed to a 14.32 million annualized pace, both the Johnson Red Book and the ICSC same-store sales data does indicate that the consumer is hanging in there despite rising fuel and food costs, which are probably taking a bit of a chunk out of households' bottom lines. Now, what this tells us is that retail sales are slowing to a much more sustainable pace. I think if you want to get a real feel of the condition of the consumer, ignore that headline number and go to that controlled retail sales group, which has increased at a 0.5% pace last month, and I expect it to do the same this month, and that really tells us where things are. Also at 8:30, we're going to see that Empire Fed data. Sequential slowing is really the story of the morning here. I expect, the pace of new orders to also slow. During the previous month, we saw the spread between new orders and inventories narrow, which is usually a pretty good forward-looking indicator that sales and business conditions are slowing just a bit. And again, it's slowing to a much more sustainable pace in line, which looks to be with an economy that's growing at 2 to 2.5%. Now, this week is going to be critical here, both at home and abroad. We're going to get 20% of the Standard & Poor's 500 companies releasing their first quarter earnings. We're going to see several top-tier economic releases, including new home sales, existing home sales, industrial production, and the Thursday morning jobless claims data, which you do want to pay close attention to this week. To close out the week, we're going to get a meeting of G20 finance ministers and central bankers in Washington. Obviously, the big story that we're all focused on is what's going on in Spain, where they've got a 23% unemployment rate, where the unemployment rate for those between the ages of 16 and 24 is 50.5%, and they really are stuck in a depression, but implementing austerity policies, which do look to be somewhat inappropriate given the condition. Now, this morning in the New York Times, you might want to take a look at Paul Krugman's article. He's got a pretty solid indictment of those austerity programs. I'm Joe Brusuelas, and that's been your Bloomberg Economic Brief Morning. Cup of Joe.